Nobody on YouTube shows you the reality of what you need to precisely look for when trading reversals and how to become profitable by using that strategy. I'm gonna show you a full breakdown on how you could find trades just like this, covering everything you need to know about reversals step by step. All of the examples that we're going to be using today are either trades that I personally took and made money on, or trades that some of my mentorship students have taken and made money on. If you can understand and apply all of the information I'm going to teach you in this video, you're going to be equipped with the ability to pick tops and bottoms with precision. You're gonna be able to find high conviction and high probability reversal opportunities that can make you a ton of money. It's critical to watch every single step of this video and to truly understand it, so make sure you watch until the end of the video. I'm going to give you every single quality that we need to look for when spotting reversals, but before I do that, it's important to understand what we're trying to even accomplish with this setup. Personally, I like to call this the exhaustion play because we are trying to take advantage when prices are exhausted, when they're either exhausted to the upside or they're exhausted to the downside. When I say exhausted, I mean either overbought or oversold. We should be looking to go short when the buyers have exhausted themselves. In other words, when all of the potential buyers have already entered into that security, and when all the buyers are gone, that's when the sellers can bring prices lower, and our job is to catch that moment. The same thing applies to the downside. When the sellers have exhausted themselves, when the stock is oversold, there aren't any more sellers there, then even a small amount of buying is going to bring prices higher, and we're trying to catch the moment where there are no more sellers and the buyers are stepping to the plate and bringing prices up. Let's go ahead and learn exactly how we can identify exhaustion, but before I do that, I want to emphasize that trading reversals is by far the most difficult trading pattern. Your odds of success is greatly increased when you're playing with the trend, not against it. I usually tell beginner traders that you should be trading with the trend. You want to be trading with the direction of price. However, reversal opportunities could be extremely powerful and it could be extremely lucrative. It can make you a ton of money. The reward to risk for a lot of reversal setups is tremendous. So that's why I also like to trade them, and I like to, at times, go against the trend. The hardest part about trading reversal setups is that you have to be willing to try it more than one time. What that means is you have to be okay with getting stopped out potentially multiple times before you actually catch the top or catch the bottom and ride the reversal. There are many times where I find an amazing reversal opportunity, I go in and it actually stops me out, it continues higher, and then it tops out 5 or 10 minutes later and I have to try that setup again. Even though catching the top or the bottom is extremely difficult, and honestly, if you're a beginner trader, I really would recommend trading with the trend and waiting until you start taking the reversal setup. And although it's difficult, it's extremely rewarding if you know how to trade it correctly. So the first thing that you're going to be looking for is consecutive red bars in a row. Ideally, you want to see at least 5 red bars in a row, and more than that, you want to see those red bars accelerate. You want to see those red bars become increasingly larger. Formally, we call that acceleration because the selling is accelerating. And if the selling is accelerating, there's a greater probability that that selling is eventually going to become exhausted. And that's where our opportunity is to go long. Because of acceleration, because of the red bars becoming increasingly larger, that leads to extension from the 20 period moving average. So this is actually one of the main tools that I use. It's one of the simplest indicators out there, and that is exactly, I use the 20 period simple moving average for every single one of my charts. It's really the only indicator that I use. I wouldn't be able to read charts without it, and honestly, it plays a huge role in me making money consistently. It's also very important when we're trying to figure out if prices are exhausted. And whenever we have a lot of distance between price and the 20 period moving average, that is called extension. And the more extension that we have, you can think of that as the more overbought we are or the more oversold we are. So in this case, prices are accelerating lower, the selling is becoming increasingly larger and larger, and that is leading to extension extension between price and the 20 period moving average. When we're trading reversals, we want to see as much acceleration and extension as possible. Lastly, we want to see a volume spike. And whenever you have a spike in volume, that could suggest that prices have either bottomed or prices have topped. So after a huge move lower where we got that acceleration, where the selling is literally becoming increasingly larger and larger, of course that's going to lead to extension. And if we do get that volume spike at the bottom, you can think of this as the last batch of sellers finally selling their positions. The stock is running out of supply. You can literally think of that volume spike as the last sellers finally selling their positions, and that is precisely where we professional traders want to go long. The exact same thing applies for the opposite direction. We want to see acceleration to the upside. We want to see the green bars becoming increasingly larger. Our goal is to go short when the demand for this stock is about to run out. In other words, when the buying is about to run out, our goal is to go short in that moment. So of course, we're looking for that acceleration. We want the bars to become increasingly larger, and that's going to lead once again to extension from the 20 period moving average. The more extended we are between price and the 20, the more overbought we are, and that's going to give us an opportunity to go short. And once again, we want to look for a volume spike because that suggests that the last batch of buyers have finally bought their positions, that the stock is officially running out of demand. Just like how it works to the downside, you could literally think that this last volume spike is the final batch of buyers that are finally FOMOing in. They're finally going long, trying to capitalize on the move higher. And that is precisely where we professionals want to go short. We want to be going short when the last group of buyers are FOMOing in, because at that point, the demand has run out and any amount of supply, any amount of selling is going to bring prices lower, and that gives us an opportunity to make money. Now, regardless whether we're going for a reversal long or a reversal short, we want to look for entry bars. Entry bars are usually narrow range bars or doji bars or bottoming tails or topping tails, and they give us an opportunity to enter into that trade with an excellent reward to risk setup. We're going to be using entry bars to place our entry and our stop loss for that trade. So for example, for this setup right here, we got the acceleration, we got the extension, we got the volume spike, and we have an entry bar. And this is like a narrow range doji bar. And our entry is gonna go below the lows of that entry bar, and our stop loss is gonna go over the highs of the entire move up. Always put your stop loss over the highs of the move. The same thing applies when we're trying to go for reversal long. We got the acceleration lower, we got the extension from the 20 period moving average, we got the volume spike, we have the entry bar, and from here, our entry goes over the highs of the entry bar, and our stop loss goes below the entire move lower. Let's look at a picture perfect example here. So what are we looking for? We're looking for one, acceleration. Do you see how the bars are starting off small? They're small, they're small, and then they become increasingly larger. You could literally see this buying begin to accelerate higher. Number two, that acceleration leads to extension between price and the 20 period moving average. And finally, if we look at volume, we have that volume spike right at the top, and that gives us that extra confirmation that the top is in, and we can go ahead and look for an entry short. In this case, we got a massive topping tail. So what do topping tails represent? Well, they represent that the sellers have taken control of price. So the entry would be under the lows of the topping tail, and the stop loss would be over the highs of the entire move up, or over the highs of this topping tail. Let's look at another picture perfect example. So we started to break down at this point right here. You could see the 20 period moving average hugging prices lower, and then we begin to drop. And you could see that the selling swing is slowly beginning to accelerate. It's slowly becoming larger and larger, and that is leading to extension between price and the blue line, which is the 20-period moving average. The more extended we are, the more oversold we are, the higher the conviction that we have that we actually want to go for that reversal. And of course, we got in this case a bottoming tail. And what does that bottoming tail suggest? Well, bottoming tails suggest that the buyers have taken control. So the entry would go over the highs of the bottoming tail, okay? And the stop loss would go under the lows of the entire move lower, or under the lows of this bottoming tail. Not to mention, we also had massive spikes in volume here at the bottom, which suggested and signaled that the bottom is in, prices are exhausted, the supply is running out, and we're ready to move up again. So far, we learned that we want to see acceleration. We want to see the buying or the selling becoming increasingly larger. That acceleration leads to extension. Add that with a volume spike at the bottom or at the top, and you could have yourself a very powerful reversal setup. So our goal is to combine, number one, acceleration. We want to see either the buying or the selling becoming increasingly larger and larger. And with acceleration, we're going to get extension between price and the 20-period moving average. We want to see prices as extended as possible from the 20 MA. And if you combine that with a large volume spike either at the top or the bottom, that's going to give you that extra confirmation that the top or the bottom is in, and you can go for the reversal. Something very important that you need to consider when trading reversals is that multiple time frames matter. And this is really the difference between an excellent reversal trader versus an amateur reversal trader. An amateur will only look at one time frame. They'll only be looking at the 1-minute chart or the 5-minute chart, and they don't consider the higher time frames. They're not considering multiple time frames in their analysis. This is beyond critical. By looking at multiple time frames, that could honestly make or break a reversal setup. We're gonna go more in depth with that shortly, but I wanna show you a great example of looking at multiple time frames. On the left here, we have the 5-minute chart. On the right here, we have the 15-minute chart, right? So what are we looking for first? Acceleration. Do we see acceleration? Well, on the 5-minute chart, absolutely. The bars are becoming larger and larger, right? Maybe it's not a perfect waterfall where literally every bar is a little bit bigger than the previous. However, you could still see the acceleration. We're accelerating from the 20 MA on the 5-minute chart. More or less same on the 15. We are accelerating. We're really moving lower, and we're creating distance between price and the 20 MA, and that distance is called extension. So we have the acceleration on both time frames. Do we have the extension? Well, price is right here, the 20 MA is right here. We absolutely have extension. What about in this case? Prices are down here and the 20 MA is down here. In this case, we absolutely have extension. I really want to emphasize that it's going to be difficult to find perfect textbook setups in the markets. Of course, we want to ideally see perfect acceleration where literally every bar is becoming a little bit bigger than the previous. We want to see a perfect volume spike, perfect entry bar, but the markets don't always provide you perfect opportunities, but they provide you good enough opportunities that you could still make money on. So you don't always have to be perfect. And I'm going to show you some other examples in this video right after this that aren't completely perfect. However, they were still extremely profitable, extremely powerful opportunities to trade. So what about in terms of the entry bar for both of these setups? And by the way, before I even talk about that, we have the volume spike. I mean, we have such a clear volume spike on both time frames because of that multiple time frame alignment with the acceleration, the extension, and the volume spike, and the entry bar that we're about to talk about. It just creates a much more powerful opportunity when we have alignment with the time frames. It's not just one time frame giving us information, it's multiple giving us the same conviction. So there's two ways you could have entered this. We have a bottoming tail on the 15, and then we also have a smaller bottoming tail on the 5. So in this case, it really depends how risky you want to be. If you want to be really aggressive and you're going for that home run play and you want a very tight reward to risk, risk, you want a large reward to risk, then you would use this 5-minute time frame. You would place your entry above the highs of this entry bar. You would place your stop loss below the lows of this entire move, and you have a really tight stop. And if you've watched any of my risk management videos, you know if there's a really tight stop, there's a high likelihood you might get stopped out, but the reward is also much higher. So the tighter the stop, the smaller the distance is between the entry price and the stop loss price. The smaller, that price is the difference, the better the reward is for that trade, right? Or you take the trade off of the 15-minute time frame, it's a bigger stop, so it's less reward to risk. However, it's a much safer play. So if you take it off the 15, the entry would be over the highs of this entry bar, stop loss would be under the lows. But of course, the reward to risk is not the same compared to the 5-minute, where this is a very small candle. You're entering off a very small entry bar, and you have tremendous reward to risk versus this alternative. So it's up to you. In that moment, you could have either done the really aggressive, very potentially lucrative play on the 5-minute chart that's also riskier, it might easily stop you out, or you take the little safer play, you give the trade more room to breathe, and it's safer, but of course you're sacrificing that reward. So as you can see, it's honestly up to you. What I really recommend is looking at multiple time frames whenever you're picking your entries. We're gonna look at some examples of that right now. In terms of what time frames I use to look for entries, I'm using the 1 minute, the 2 minute, 5 minute, and the 15. But if I had to say, I only use the 1 and the 2 if I'm being extremely aggressive. So far we talked about acceleration, we talked about extension, we talked about volume, we talked about looking at multiple time frames, we talked about entry bars, but there's one final thing that I want to talk about that's also extremely powerful. It's an amplifier to the reversal trade that could completely make or break a setup. I want you to look for either a huge move up, a huge acceleration to the upside into a resistance area, or the opposite, a huge move lower, acceleration to the downside into a support area. A resistance area is an area where sellers have previously took prices lower. Sellers have previously sold. So if you see a huge move up, an exhaustion move to the upside, a climactic move up into resistance, that just gives you extra conviction, especially if you're getting all of the other qualities that we talked about. It gives you that extra conviction that this is an excellent setup to go short. And of course, the same thing applies to the downside. If you're getting a huge move lower, the acceleration, the extension, volume spike, you have yourself an entry bar and it dropped into an area of support, it gives you that extra conviction that prices have bottomed and we're likely to see a move higher. A huge misconception with this is that traders tend to just short at resistance and buy at support. This is a mistake. You need to have the other qualities. This is not about trading support or resistance in a vacuum where you're only considering support and resistance. You still need to consider everything else we talked about in this video. You need the acceleration, you need the extension, you need hopefully the volume, you need the entry bar, you need everything to align. That's what creates a high probability setup, not one quality or even two qualities, when 4 or 5 qualities that you look for in a great setup align. And then if you combine that with multiple time frames, boom, you have yourself such a high probability trade. The more qualities that are aligned, the higher the probability that that trade is going to work in your favor. Let's look at some more real life examples of trades that I've either taken and made money on, or that I called in my mentorship room and I had my students make money on. So the first one is we're going to be looking at Delta Airlines, Dow, and this was from last month, sometime in September, and we could see this excellent reversal opportunity. Now let's go ahead and analyze what I saw in that moment and whether this opportunity fits all of the criteria that we already talked about. So number one, do we have acceleration? And this was actually a gap up. So Delta Airlines gapped up overnight, a very small amount, about $2. And then as soon as it opened on this day, it completely collapsed. And we did see that acceleration. Maybe the red bars weren't becoming increasingly larger, after each red bar was formed. However, we accelerated lower and that led to extension from the 20 MA. Okay, this was a huge move lower. And we combined that with a nice doji bar. It's not a small doji bar. This was kind of a bigger doji bar than we wanted. However, It's never going to be completely perfect. And then we also had a volume spike here at the lows. So we got the acceleration, we have the extension, we got the volume spike, and we got a doji bar, which is our entry bar. Now, it wasn't the best doji bar in the world. Ideally, we would want to see a smaller doji bar. In that case, we would have a better reward to risk. We would have a tighter stop. However, the entry go over the highs of the doji bar, and the stop loss would go under the lows of the entire move lower. Now let's go ahead and look at multiple time frames. So I went to the hourly time frame, and now I want to identify, did Delta Airlines drop into a support area? And if it did, and that's actually exactly what I identified when I was actually looking at this trade in the mentorship room, and of course during the market open. Next, we're going to go ahead and check out the larger time frames and do multiple time frame analysis. And in this moment, I especially remember when I was live trading and talking about it in the mentorship room and just moderating, I remember me pointing it out that it was dropping into a major support area, and we could see that on the hourly time frame. And that's actually why it's so useful to check multiple time frames. We dropped into a heavy area of support below the 20 period moving average. So this was an excellent opportunity where everything aligned, right? We had the massive drop, the acceleration, we had the extension, we had the volume spike, doji reversal bar, plus we dropped into a, congested area of support. The next example we're going to look at is NVAX on September 13th. And I specifically remember this setup because it was such a beautiful opportunity. And I actually took this trade and ended up walking away with some pretty nice profit. I think this was like an $1,100 trade, something like that. And let's go ahead and analyze it. So number one, we're looking for acceleration. And by the way, we're on the 5-minute time frame. We're going to be looking at other time frames in just a second, but on the 5-minute time frame, do we have acceleration? In this case, we actually do. You could see that NVAX was essentially in an uptrend the entire day, and then all of a sudden we had a breakout right here, and then we started off with some small green bars, and then we see a bigger green bar, bigger one, bigger one, bigger one. And then we ended up continuing higher, and we got the extension as well from the top. And as soon as I saw that doji bar, I said to myself, this is close to a perfect opportunity. And I went short under the lows of the doji bar, and I put my stop loss over the highs of the doji bar, okay? And then I capitalized on this move lower. I took profits when we dropped into the 20 period moving average, so I missed out on this move. However, I capitalized pretty well. My target was the 20 MA on the 5-minute chart, but we got the acceleration that resulted in some major extension from the 20 period moving average. Great. Do we have a volume spike? We did not have a volume spike, right? Maybe we could check. Let me go ahead and check the 15-minute time frame. Maybe we did. I mean, if you look at the 15, you could say that we had massive volume coming up, right? We could even see that 15-minute doji, right, which was beautiful, but we didn't have a very clear volume spike like with the other examples that I saw. But I want to emphasize that obviously we want numerous qualities to align, but sometimes it's not going to be perfect. Where if I'm looking at a setup and I'm thinking to myself, okay, the acceleration is great, extension is great, great doji bar, great multiple time frame alignment, right? Volume, it's not gonna make or break the setup, so I took it anyway. I didn't really care that we didn't have a volume spike. And yeah, beautiful setup here, beautiful exhaustion play. And like I said, entry below the doji bar on the 5, stop loss above it, and you could have even done it off the 15-minute chart. You could have placed your entry under this 15-minute doji and placed your stop loss above as well. Probably lower, obviously lower reward to risk on this setup, on the 15-minute time frame, entering off of that, but still regardless, really good trade. Let's go ahead and look at the daily time frame or the hourly, whichever one. I'm gonna do the daily this time and see, did we move up into an area of resistance? Let's take a look, and yeah, we did. We have a high here, a high here, and we moved right into those two highs. You could also, call this entire area resistance here, but it's mainly really these two highs, but you could also include this right here, okay? So we moved up into an area of resistance. Actually, instead, we accelerated into an area of resistance. We were super extended. We got the 5-minute entry. We were into a lot of congestion and was a beautiful setup, and we were able to capitalize on it in the mentorship room. Alrighty, let's go ahead and look at EEX. This was from September 16th. 16th, I believe. And this was actually a very upsetting trade because, believe it or not, I missed it. I was actually looking at two different reversal opportunities, and I ended up going with the other one that actually didn't work out. And this one, which I was watching very closely, but I missed it at the last moment when it actually, did the reversal. When it triggered, I just wasn't quick enough and I missed the setup. But this was something that we were watching very, very closely in the mentorship room, and unbelievable trade. We started moving lower, we kind of based, and then we had 1, 2, 3, 4, 5, 6, 7, 8, close to 9 red bars in a row. Aside from this one little green bar, it was essentially 9 red bars in a row. And the red bars definitely became increasingly larger. We had that extension from the 5-minute chart. Perfect. Let's go ahead and look at the 15 for extra confirmation. Absolutely. On the 15, you could actually definitely see the acceleration here and the extension from the 20 period moving average. And I want to show you guys the 1-minute chart because I remember looking at the one. Let's see here. I remember, or was it the 2-minute? Let's see. Because I remember seeing a volume spike, maybe. But let's look at the 5. Let's go back to the 5. I thought I remember seeing a volume spike in either the 1 or the 2, but I guess we didn't. No problem. Or maybe I guess you can consider these two volume bars volume spikes, but I want to see like a huge volume spike. We didn't really get that, but that's fine. Still really, really good setup. And what made this setup really interesting was the daily chart, and we're about to look at that. But so we got the acceleration, and what I liked about this, from what I remember when I actually looked at it after the fact, was we dropped, and then we had a small little green bar, and then we attempted to drop again, and that failed and immediately resulted in a green bar, and it just went straight up. In this case, the entry was over 420, over the high of this little narrow range bar, and over the high of this red bar, and the stop loss again is at the lows. Okay, so like, let's see, 420 entry, 408 stop, that's like a 12-cent stop, and it rallied all the way to $5. Insane. So you were risking 12 cents to make 80 cents. Let's say even you took profits here, a 475. So what is that, 55? You're risking 12 cents to make 55 cents. Unreal reward to risk, unreal trade. But what made this also especially interesting was the daily. So let's take a look at the daily. Look at this daily. And in this case, we actually just sliced through all of this support. But what I want you to look at is we had a massive red bar 2 days prior, then we had a small little doji, and then we had another massive red bar. I mean, this was oversold, exhausted, not only on the 5-minute and the 15-minute time frame, and obviously the 1 and the 2, in other words, on the intraday time frames. It was also exhausted and, oversold on the higher time frames, such as the daily chart. This is what is called a full climactic. Whenever you are exhausted, or you could call it climactic, or oversold or overbought on the daily time frame, or the weekly time frame, or even the hourly time frame, plus you're exhausted on the intraday time frame, whether that's the 1, the 2, the 5, or the 15, that is called a full climactic, where those the higher time frame and the lower time frame align. They're both oversold, and it just creates a much more powerful opportunity. So in summary, oversold on the daily, ripped through all this support, exhausted on the daily, of course, and then we got the acceleration, we got the extension, we got a pretty nice entry, tight stop loss. We didn't get the volume spike precisely exactly how we wanted it, but still almost a perfect setup. Let's do one last one. This is IMRX, and this was from September 16th as well. And as you can see on the 5-minute time frame, we have a very, very stable uptrend. You could see how well prices are respecting the 20 MA. We're grinding up, we're grinding up, we're grinding up. And right here, we start to get that acceleration. Green bar, green bar. We did get a red bar, but then another green bar. Red bar, but then green bar, and then huge green bar up, and that's when we topped out. Let's go to the 1-minute chart, or let's go to the 2 actually first, the 2-minute chart, to see what happened. But yeah, you could definitely see that acceleration, right? Even though it's not consecutive green bars in a row, there's some red bars in between, you could still see that acceleration from the 20 period moving average, which of course resulted, even on the 2, it resulted in extension, right? So you could have traded this as a 2-minute setup right here with the narrow range bar, entry under that narrow range bar, not exactly narrow range, a little bit bigger than we would want, but still valid. Entry under it, stop loss above. Okay, so that was a very, very valid setup. Let's go to the 1 and see if there's maybe a better one. Same thing with the 1, shorted it under here, stop loss above. Okay, that's probably the same. Let's see, actually, in terms of reward to risk. Let's see, it was 365 was the entry. Stop loss was 385, call it. So that's 20-cent stop, and it dropped essentially straight down to 285. So 285 on a 20-cent stop. Yeah, I mean, that's what, 3 Rs, right? If I'm doing the math right, even more than that, 3 to 4 Rs, 3 to 4 reward to risk. Pretty amazing. I missed this one. Not that I missed it, actually, I don't want to say that I passed on it, because it was quite difficult in the moment. It was really difficult in the moment. It was kind of wild too. It was moving, it was fluctuating like crazy. So I actually just intentionally passed on this, and we were watching it in the mentorship room. The students were watching it. Actually, I had a bunch of students take the trade, but I personally passed on it just because it was a bit too wild for me, and I was already up on the day, and I just didn't want to give back any profits. I didn't want to, be too aggressive, but still, another very interesting opportunity went straight down. Of course, we have that extension, acceleration on the 5. Let's go ahead and look at the daily time frame and see what's going on here. Yeah, daily time frame, we moved up right into that 200, but we actually broke it. So the daily doesn't give us much information, right? Because this was kind of like a fresh breakout on the daily, but nevertheless, really quite a powerful opportunity on the intraday time frame. So we didn't quite get that daily alignment, right? That was probably another reason why I wasn't in love with it, but nevertheless, still worked beautifully based off the acceleration, the extension, and of course, the entry bars as well. Let's see if we had the volume spike. Did we? Yeah, we did. Wow. We had the volume spike on this red bar, so I'm curious when exactly did that occur. Yeah, I mean, volume spike. Yeah, I was a little bit late, actually. It wasn't quite at the top. So in that case, volume, we didn't have perfect volume here either. So that was probably another reason why I passed, but hopefully all of that makes sense. Make sure you begin implementing everything that we talked about today in your trading. And quick little 20-second summary. We're looking for acceleration, extension. We want a volume spike. We want to see all of that on multiple time frames. We want to specifically also see it on the hourly and daily chart. And ideally, we are, getting overbought or oversold into an area of resistance or support, respectively. If it's getting bought, overbought, exhausted to the upside, we want it to move into a resistance area. If it's getting oversold, exhausted to the downside, we want it to move into a support area. If you want to live trade with me every single day and also be personally mentored by me and have the opportunity to take trades just like this with me every single day, and of course, hopefully make money with me every day, then you could be an excellent fit for my mentorship program. I personally take you under my wing. I teach you from A to Z, and from there, you trade live with me daily, and you learn trading by actually doing it. There's going to be a link somewhere below this video where you'll be able to apply. And if you do qualify, if you are accepted, if you don't make your investment back within the first 6 months, I will work with you for free until you do. You will trade with me for free until you do. Well, guys, thanks for watching this video. Make sure you like, make sure you subscribe, make sure you leave a comment if you found this useful. And hopefully this video will make you a ton of money over the coming weeks and over the coming months. Have a great day. Thanks for watching.